Hello, thank you for joining us for today's webinar on the Paycheck Protection Program. My name is Tony Bowen, and I'm joined today by my colleague Wendy Seligson, and we're from FMA. For more than 20 years, FMA has helped the nonprofit sector improve financial resiliency. We're recording today's webinar on April 11th to bring you the latest updates on the PPP, as well as a variety of tips and tricks on how you can apply based on lessons learned from those that have gone through the process and been approved. On today's webinar, we're going to cover the basics of the Paycheck Protection Program, how to apply, how to estimate two key calculations in your application, key documents to collect, as well as some FAQs that we have been collecting from webinars like these, and also share some resources that are available to you. We encourage you to check out FMA's Paycheck Protection Program Toolbox. We are updating it every day with new tools and resources for you to use. On the toolbox includes a copy of this presentation that you can download, and please use and share it. We also have a calculator so that you can be supported in determining the loan request amount that you'll be making, as well as a board resolution in case your board bylaws require that you get formal board approval before applying for a loan, a script in case you haven't talked to a bank before about PPP and aren't quite sure how to start the conversation, and lastly, we've got a comprehensive set of FAQs that we hope you'll find valuable. If after listening to today's webinar you have more questions, we encourage you to reach out to us. We've set up an inbox just to talk about the PPP. You can reach out to us at fmacares@fmaonline.net. Now, we use that email address because the PPP is part of the CARES Act, and because FMA cares about the nonprofit sector and making sure that you get the resources you need to be successful. One of our experts will assist you with your questions as soon as possible. And with that, I'd like to turn it over to my colleague, Wendy.
Thank you, Tony. I'm pleased to be here today to share an overview of the Paycheck Protection Program and how nonprofits can apply to get the benefits from this program. The federal government, Congress, very recently adopted the Paycheck Protection Program to help to keep workers on payroll. It's an important thing to keep in mind as we learn more about how the program works and how to apply for the program. The goal is to keep workers on the payroll and to keep people able to get the salaries and the wages that they have been receiving before this recent events. The Small Business Administration will forgive the Paycheck Protection Program loans when employees are kept on the payroll for 8 weeks, and the money is used for payroll and other important expenses, rent, mortgage interest, and utilities. There are 4 basic questions that need to be answered to really understand the program. How can nonprofits apply? How much can nonprofits borrow? What can the nonprofit use the loan for? And how much of the loan will be forgiven? But the goal in many cases is most, if not all, of the loan is forgiven. We're going to take a look at the answers to each of those questions. The first question is, can you as a nonprofit apply? There are a few simple rules. You need to have 500 or fewer employees who principally reside in the United States. This is a standard Small Business Administration requirement. 500 or fewer employees. You must certify that the current economic uncertainty is affecting your nonprofit. You must be a 501c3 or a 501c9 and have been in operation at least as of February 15th of 2020. So the eligibility requirements are very simple for nonprofits. You need to have 500 or fewer employees. The next question that we're looking at is how much can a nonprofit borrow? The basic rule is nonprofits can borrow 2.5 times payroll. The program is designed to help to keep employees in jobs during this period of crisis. And so the loan amount is 2.5 times payroll to help your nonprofit get through this period of time. And payroll includes salary, severance, paid leave, benefits, and some taxes. And this information is in lots of the guidance materials that you can look at as you're preparing to your materials and the loan application. You can borrow up to $10 million max. Your lender will do the final calculations, and we have on our website in our toolkit a calculator that will help you estimate how much you can borrow. 2.5 times your payroll. The next question is, what can a nonprofit use the loan for? The loan can be used for payroll for 8 weeks, 2 months to get through this period of time, with at least 75% of the loan going to payroll. It can also be used for some other important expenses for nonprofits, like utilities, rent, and mortgage interest. These are the expenses that qualify. Once your nonprofit has borrowed the money, the question is, how much of that loan will become forgiven? How much of that loan will be converted to a grant? You as a nonprofit are able to keep all of your employees on payroll, so you maintain a similar amount of full-time equivalent FTEs as you've had in the past, and you spend it on approved categories, and there are no significant decreases in salaries, in this case defined as no decreases by more than 25% for people making less than $100,000, the loan will be forgiven. The details are in the guidance that accompanies this overview. Overall, if you're able to keep employees on payroll and make no significant cuts, your loan will overall be forgiven.
Thanks for that overview, Wendy. So if Wendy has you convinced that you're eligible for the program and you're interested in applying, what should you do immediately? First, please reach out to your bank to confirm that they're an SBA lender and they'll be processing PPP applications. If they won't be, ask them for a referral. Once you've identified the bank that you're going to apply with, make sure to understand their application process and what documents they're going to require. Next, get authorization from your board via a resolution to apply in case it's required in your bylaws. Now, for some of you, you may not have looked in your bylaws in a while, but please look up anything requiring you to pass a resolution if you take out debt. At a minimum, we do recommend that you at least get your board to sign off via writing to make sure everyone's on the same page. Next, I need you to gather some payroll information from the last 15 months. Specifically, you should grab 2 payroll reports. The first will be for January 1, 2019 through December 31st, 2019. The second will be for April 1st, 2019 through March 31st, 2020. Now within these payroll reports, you want to pull a report that has different columns for the different kinds of payroll expenses that you're eventually going to be calculating. For example, you want columns for gross earnings or wages, health benefits, if applicable, state and local taxes, and then for the rows, you would like every employee listed, and we'll get to why you need that kind of report later. Now, if you're a payroll company already has created a PPP report to streamline this process for you, that's great. Just make sure that when you're reviewing the report, it was created on or after April 7th. And the reason for that is because the SBA provided new guidance on the evening of April 6th, and we want to make sure that you have the most accurate report possible. After you've pulled those two payroll reports, you're then going to start to pull some key documents that we'll share later in today's presentation. And then go ahead and apply. So now that we've provided you with an overview of the program and what you can do to get started, let's dig into the application itself and how to do some of the key calculations that you'll need to fill in. Up on the screen, you'll see a screenshot of the standard PDF Small Business Administration PPP application. The SBA created this application and then dispersed it to lenders who have been actively working to adapt it into their own systems. While some banks will be accepting the PDF itself, most have built their own online forms in order to receive your information. When you take a look at the key fields, most of them will feel pretty familiar, looking for your legal name, your address, but there are a couple of key calculations that we will do together. We will do the average monthly payroll, and we will show you how to do the number of employees. One of the questions on the application is that you need to check off the purpose of the loan. You'll see the options are payroll, lease or mortgage interest, and utilities, which is consistent with what Wendy went over earlier. But you'll also notice that it says other. This is a gotcha question. The SBA is trying to see if anyone's going to use the loan on something that it's not intended for. So, if you do two things coming away from this webinar, please do the following two. Apply if you're eligible and you're interested, and please do not fill out this other box. We want to make sure that you're using the loan for its intended purposes, and we want to make sure that your loan gets approved. So please do not add anything to other. The next set of questions that you'll notice are about applicant ownership. This question has left many people in the nonprofit sector scratching their heads. It says, list all owners of 20% or more of the equity of the applicant. But wait, nonprofits don't have owners. Sure, we have board chairs and we have executive directors, but they're not the owners. Well, the SBA is used to making loans to for-profits, and this is one of the first times that nonprofits have been included in such a large program like this. And so we're going to have to do a little bit of a workaround in order to make this work. Where you are required to put the owner name, we recommend that you put NA 501c3. And for all the other fields related to putting in NA 501c3, just list the organizational information that you have on your nonprofit. We would rather you do this than put down someone that actually is not an owner. Next, we have some guidance for you on each of the specific fields that you're going to need to fill in. What we've tried to do here is help you see, oh, if I see this field, here's what it means in nonprofit speak. What I want to focus in on right now is this field called number of employees. Okay, so you're going to be asked to do a couple of calculations. The first is average monthly payroll. You're going to do this either based on calendar year 2019 data or last 12 months data. We'll go over on the next slide why you should pick one of those two options. Based on the one that you pick, let's say calendar year 2019, that's how you're going to calculate the number of employees to fill in this particular field. What you're going to do is take the average monthly headcount from each payroll in the 12-month period that you actively analyzing. So for example, you'll see that in January you had 10 people, in February you had 12 people, etc., etc., and then you'll take the average. It's important to remember that this is average monthly headcount, so it's number of humans as opposed to full-time equivalents. So after you've filled that out, now we're going to talk about how to do the average monthly payroll calculation. So this wouldn't be an FMA webinar if we didn't start to really get into some math, but hopefully we're going to make this math a lot easier and a lot more straightforward for you. So what we're going to focus on now is defining average monthly payroll. Let's break this down into two parts. What do we mean by average monthly, and what do we mean by payroll? In terms of average monthly, the SBA has clarified that you can choose one of two options for most organizations. The first would be to use calendar year 2019 data to figure out your average monthly payroll. So you would look at your payroll data on that report that we already suggested that you pull for January 1st, 2019 through December 31st, 2019. Next, you have the option of looking at the last 12 months. This would be April 1st, 2019 through March 31st, 2020. So why would you pick one over the other? Well, for calendar year 2019, it is the cleanest, it's the most easily available data, but also if you had to make layoffs or cuts in the first quarter of 2020, then you may want to consider using the calendar year 2019 data because it will give you a more accurate depiction of where your payroll really is supposed to be in a world in which we don't have COVID. The other option that you have to use is last 12 months. So why use this one? Organizations may want to use this if the organization has grown significantly during the last 12 months and or it's increased its wages or the cost of benefits has gone up. So that way you capture more months that are recent, particularly January through March of 2020. We do have a great calculator that you can use to compare these two options and see what's going to be the best fit for you. Now you may be scratching your head and saying, wait, I don't have 12 months of data because I haven't existed for 12 months. Well, there is a carve out for new organizations, specifically for those that did not exist before July 1st. In your case, you will use January 1, 2020 through February 29, 2020 data. The last carve out is if you're a seasonal employer. Essentially, if between March and June, you have a higher spike in payroll costs than you do in all other parts of the year. In this particular case, the lender themselves will look at your last 12 months of data and determine if you should be a seasonal employer if they see a large spike in the March through June timeframe. So, just to be clear, you're probably going to be picking between number 1 or number 2. And once you've picked that, now let's talk about specifically what payroll calculations you should be making. So, what do we mean by payroll? In the definition for the PPP, it's really 5 things. Gross earnings or salaries, essentially all cash compensation, plus health and retirement benefits, plus state and local taxes. For health benefits, we mean medical, dental, vision. For state taxes, where you might find this on your payroll report is with the acronym SUTA, S-U-T-A. You'll often also see the word ER next to it, which stands for employer, so SUTA ER. So you want to take these 5 parts of payroll and add them all up together. Next, you want to remove any excess wages for salaries above $100,000. So If your executive director makes $110,000, you're going to remove that extra $10,000 from your calculation so that the most salary that any employee has per month is $8,333. Next, 1099s are not to be included in payroll calculations. So please remove any 1099s from the payroll report that you've been working with. And then lastly, any employees who permanently reside outside of the United States. So essentially it's A plus B plus C, and then take out any of the two items on the right. So let's use an example. If you added all these up together, did your subtractions, and you came up with $1.2 million in payroll, well, you would divide by 12 and you would get an average monthly payroll of $100,000. Now, in case it's helpful to see what we just covered in more textual format with some more specific wording, here's what we mean by what counts as payroll and what doesn't count as payroll. So once you've calculated your average monthly payroll, in the example we used, 100,000, you're going to multiply it by 2.5 to get your loan request, in this case 250,000. Please note that if you took out an economic injury disaster loan before April 3rd, there is an extra calculation for you to make there. But overall, you're going to take your average monthly payroll, multiply it by 2.5, and that's your loan request. Hopefully at that point, your shoulders are then going to drop a little bit because you're going to realize that there's now the potential for you to receive a forgivable loan for a significant amount of your budget in order to make sure that your organization can survive over the next couple of months. As I mentioned earlier, we have a calculator that you can use in order to make all of this math easier. It lets you select different options in terms of calendar year 2019 versus last 12 months versus new versus seasonal. And it already has pre-built all of the columns in it that match that slide from earlier to make sure it's clear what expenses are you going to be including. It also will automatically pull out the excess salaries above 100,000. And then lastly, you'll be able to, without having to do any of the math yourself, be able to get the average monthly payroll and loan request here that you can fill in on your application. If you're looking for a slightly simpler estimator, rather than listing every single employee, in this calculator, you will basically look at the bottom of your payroll reports for key information, and then only put in employee data for those that make above $100,000. But again, just like the other calculator, it's doing the math for you to try to make this as easy as possible. So we've gotten through the math portion of today. Now we need to focus on what documents are you going to need to apply. So you're going to need to check with your lender, but banks will likely request certain key documents, and we'll show you them on this slide and the next one. So you're going to have to fill out that application, whether it's the PDF form, if that's what the bank is asking you for, or most likely an online application in their portal. And then you're going to need those payroll reports that you pulled earlier so that the lender can verify how you came up with the amounts and the calculations that you did. Keep in mind that if your health benefits fall under a separate payroll report than what you're able to get out of your core payroll system, you will need to also provide those along with your retirement backup. You'll see a little bit more detail on this slide in terms of exactly what forms are necessary. But as we just mentioned, healthcare premium backup, retirement plan backup, and those payroll reports. The last key document that you will need will be payroll tax reports that you filed with the IRS. Now, in the event that the bank says, please file your 940, you may realize that you actually don't file that. So instead, you're going to upload your 941. All of these documents should be available on the administrative part of your payroll software. Lastly, if you're working with a bank that you don't currently have an account with, you're going to need to provide just the kind of documentation that you would as if you were opening a new account. For example, you're going to need your articles of incorporation and your bylaws, and you may also need some financial data. Those could be your financial statements, whether audited or unaudited, or your 990s. So now that we've talked through what the application itself looks like, how to do several of the important calculations, and what key documents to collect, we want to walk through the process that you might actually experience with your lender. Keep in mind that each lender is going to have a slightly different process, and the online applications and different ways of collecting information are evolving. So let's start at the beginning. First, if you're working with your bank, you will most likely complete an informational inquiry, either online or over the phone. You should be ready for this conversation by pre-filling out the standard SBA PDF application, because what we are seeing is that most lenders will ask you for all of that information right up front, including the average monthly payroll. Next, either within the portal itself, you will go to a next page and be asked to upload a lot of documents that we talked about earlier, or the lender's going to say, "Thank you for submitting your inquiry. We will be in touch over the next 2 to 4 days and invite you to continue in the process." In which case they will then invite you to upload the key documents. After you press submit, now it's up to the lender to verify the information that you submitted. Now this part can be anxiety producing because it could be a day before you hear back from the lender. It could be longer than that. We are still continuing to see a range of response time from lenders based on the volume that they are dealing with. The lender may have questions for you, and throughout your interactions with the lender, we encourage you to be persistent, but respectful and responsive. Keep in mind that the lenders very well could be your neighbors. You may go to the same grocery store, and so we're all under a lot of stress and anxiety right now, but encourage you to be respectful. After the lender verifies your information, and they can prove how you got to the average monthly payroll calculation that you did based on the payroll reports that you provided. Next, if they have reviewed your application and feel confident in it, they will send it to the Small Business Administration through an online portal of their own. Then, the Small Business Administration will review the application. If it's good to go, they will notify the lender. Again, during this process, feel free to reach out to your lender, but keep in mind they're dealing with a lot of requests right now. But it's good to stay attuned to where the status of your application is. Next, hopefully you'll hear some good news and the lender will approve your application. If so, you will receive the loan note or contract for your signature. We are seeing a lot of lenders use DocuSign or another electronic signature format, so be ready for that. We encourage you to read the note very carefully so that you know the terms that you're signing up for. If unfortunately you are denied at any step in the process, try to inquire why and then see if you can resubmit. Now, for those of you that are approved, you should be able to get your funds shortly. At the time of this recording, we still don't know the average amount of time it takes to go from the complete informational inquiry all the way through disbursement. But we do know people that are getting approved, and that is exciting for the nonprofit sector. But what happens if you are not able to find a lender and your bank isn't accepting applications from organizations like you right now? This may be due to the fact that they're not an SBA lender. you don't have the right kind of account with them, or they've hit some kind of cap. Here are some things you can do. Ask your bank for a referral. The banking industry, because of both regulations and norms, is a highly relational space. And so we encourage you to tap your network and ask your board and funders if they have relationships with any lenders that might be accepting applications. We encourage you to share with others once you learn. We've had a lot of stories of people who have said, it's not listed on their website, but if you call this bank, they are accepting applications. Lastly, you can cold call SBA approved lenders by looking up on the SBA website by zip code. And we do know some people that have had success through that. Just takes a little sweat equity to get through that part of the process. So we've talked through the basics of the program, how to complete the application, key fields and documents. Here are some final tips and tricks. Remember that the program is first come, first served. So if you have any doubts, at least reach out to your bank to get the conversation going and discuss with your board so that you don't miss out. There is no fee to apply and there's no obligation to accept the loan if it is offered to you. If you do see a fee tied to this with your bank, you can feel free to let us know at fmacares@fmaonline.net, because that should not be happening. Keep in mind that guidance is evolving daily. You may be prepared to pivot. And we still know that more guidance will come out as it relates to forgiveness. Please do not assume that you will get approved. It's important that you continue to monitor your cash flow, connect with your funders, and go through scenario planning. And lastly, please expect glitches when applying online. Sites have been crashing and were built very quickly, and so they're not well tested. So please keep in mind you're going to have some patience as you go through the process. So next we want to share some FAQs that we've been receiving, in addition to the question about where do you turn to if your bank is not offering PPP loans at this time. We've collected FAQs in the FMA PPP Toolbox, and we encourage you to check those out. We are trying to keep those as up to date as possible. Are independent contractors part of average monthly payroll? Simply put, no. They are allowed to apply under their own applications, but that is a separate process outside of your organization. Next, beyond the application and document requests from the lender, what else might they want to know? So the reality is that's going to vary, but you should be prepared either in writing because there'll be a question about impact of COVID-19 on your organization, or through a phone conversation with the lender. You should be prepared to discuss the impact that the economy has had on your cash flow and your ability to deliver programs, your mix of revenue and expenses, and what decisions you are making about how you need to adjust your operations in this climate. All typical things you would talk to with your board or with a funder. We've heard from a lot of folks a question around if they receive restricted government or foundation funding that covers positions, does that affect how much you can apply for? It does not affect how much you can apply for, but there are still some open questions around how the accounting will work after you receive the funds in terms of how you will allocate funding across the PPP versus some of the restricted funding that you might have. We will be providing more guidance on that in the coming weeks. And lastly, what happens to how much we can get forgiven if we have to have reduced employee levels since February 2020, or you may need to do so in the coming weeks? First off, there's an explicit cutoff that if you have to do any layoffs, it's to do it by April 26th if you're going to remain fully eligible for the forgiveness portion of the loan. It's not to say you won't get fully forgiven if you do have to make layoffs after April 26th, but it could make the calculations a little more challenging. Most importantly, the rules are still changing. The SBA has explicitly said that it will put out more forgiveness guidance. But you can read through the examples that we have here in terms of how you're going to be comparing the average number of full-time equivalents during the 8-week period of the loan and compare that to either this time last year or the 2 months before COVID-19 to figure out whether or not you kept up your payroll, which is the point of this program. We've also received a lot of questions about how to calculate forgiveness. And so Jewish Federations of North America has created this great chart for how to do this. They also have a forgiveness calculator that we encourage you to check out. We have some resources available. Just as a reminder, we've talked about some of these already throughout the session, but just so that you have them, please do check out the Paycheck Protection Program Toolbox and check it out regularly as we develop new resources. Here's a list of some of the tools that we have to offer. As we mentioned, the FAQs, the calculator, the template for the board resolution. We do encourage you to check out the SBA itself. That is where we've gone for all of our guidance, and they have a variety of FAQs as well as some more technical rulings that you can read up on to make sure that you're in compliance both at the application stage but also how you use the loan itself. As we mentioned earlier, Jewish Federations of North America is one of the leading organizations on small business loans and specifically the PPP. We encourage you to check them out as well. So, if you still have any questions after coming out of today's session, we encourage you to reach out at fmacares@fmaonline.net. We look forward to receiving your questions. Grateful that you joined us today for this webinar. Please share any feedback you have with us at the FMA Cares email address. And if you're eligible and interested, we hope that you will apply. Let us know if you get approved. We would love to be able to celebrate with you. Thanks so much for joining us today.